Welcome back. Two forces are about to collide. XRP is sitting right in the middle. One side, the biggest names in American crypto flew 6,000 miles to Tokyo today to talk about XRP. The other side, 56% of every American who owns XRP is underwater. 6 straight red months, the worst stretch in this coin's history. Today, April 7th, Ripple is hosting the biggest XRP event of the year at Happo-en, a 400-year-old garden in Tokyo. 3,000 attendees, 20 speakers. Andreessen Horowitz, the biggest crypto venture firm on Wall Street, sent Sungmo Park. Securitize out of Miami sent its Japan team. Evernorth showed up. Ripple's senior leadership, Christina Chan, Tatsuya Kurogi, Marcus Infanger, already on the ground. The question is why? Why is the most important XRP event of the year on the other side of the planet? And why is your bag bleeding while it happens? So let's break it all down. One word answers it. Rules. Japan gave them rules, America has not. Japan has something called the JVCEA Green List, an official list of crypto assets institutions are allowed to touch. XRP is on it, third most adopted regulated asset in the country, behind only Bitcoin and Ethereum. 20 licensed Japanese exchanges trade it cleanly. In the US, we are still arguing what XRP is. The fix is sitting in Washington right now. It is called the Clarity Act. The Senate Banking Committee is supposed to mark it up in late April, about 3 weeks from today. Senator Bernie Moreno of Ohio said it on the record this week. If the Senate does not move by May, the bill dies for all of 2026. Try again in 2027. 3 weeks, that is the window. Here is the connection to your portfolio. American banks, asset managers, pension funds, they cannot legally hold XRP at scale until that bill passes. Their lawyers will not let them in the game. Meanwhile, Japan's biggest financial group, SBI Holdings, launched a $64 million bond in February that pays its rewards in XRP. The first time a major Japanese bank has ever done that. While American banks wait for a memo, Japanese banks are already paying yields in XRP. That is the gap, and every month it stays open, more American capital walks out the door and shows up in places like Tokyo. The headlines are one thing. The data tells a completely different story. Here are the 3 numbers that tell you exactly where XRP stands today. 1. Daily transactions on the XRP ledger crossed 2.7 million per day in the last 30 days. Tokenized real-world assets on the ledger jumped 35% in a single month. 27,000 active liquidity pools. Network usage is exploding right now. 2. XRP supply on Coinbase just hit a historical low. 60 straight days of holders pulling coins off the exchange into private wallets. That is XRP coming out of circulation, not selling pressure. 3. Japan's regulated tokenized asset market, bonds, real estate, stocks turned into digital tokens, already manages $2.8 billion, projected to hit $6 to $7 billion by year-end. A big chunk of that infrastructure runs on the XRP ledger. Network usage, holder behavior, institutional infrastructure, XRP is winning on all 3. Today, in Tokyo, that winning got a stage and 3,000 witnesses. At this point, you might be thinking, why isn't the price exploding? Fair question. Let me show you the data that makes me hesitate, even with everything I just laid out. Glassnode, the on-chain data firm, published a number this morning, 43.4%. That is the share of all XRP in circulation currently held in profit. The lowest reading since July 2024, a 21-month low. 56.6% of every XRP in existence is underwater right now. It gets worse. Since November, holders who bought above $2 have been realizing losses at $20 to $110 million per day. Daily. That is not panic. That is grinding capitulation from late buyers. If you take nothing else from the last 5 minutes, remember this. The fundamentals on XRP are the strongest they have been in years, and the holder pain is the worst it has been in years. Both are true. The gap between them is the trade. You know what I just showed you. Now let me show you what is fighting against it. Stop, Rewind everything I just said, because there is a force powerful enough to override all of it. That force is not on a chart. It is in a building in Washington. His name is Jerome Powell. He runs the Federal Reserve. Right now, he is holding interest rates higher than at any point in almost 20 years. Here is why that matters. Cheap money makes investors take risks. Crypto, tech, growth. Expensive money makes them sit in treasuries and cash until Powell cuts. Every dollar that wants to come into XRP has to fight that gravity. The federal funds rate sits at 4.25%. The last inflation reading came in at 3.1. The Fed's target is 2. Inflation is still above target, which means Powell cannot cut without looking like he is surrendering. And on top of that, we just lived through Liberation Day, April 2nd. New tariffs from the White House on Chinese goods, European cars, industrial metals. The market dropped 3% in a session. Bitcoin lost 5%. XRP lost almost 7%. Tariffs raise prices. Higher prices keep inflation up. Sticky inflation keeps the Fed locked. A locked Fed keeps crypto in the basement. Now zoom out. In the last 30 days alone, Ripple signed a deal with MasterCard. The XRP ledger crossed 2.7 million daily transactions. Real-world tokenized assets on XRP grew 35%. American firms flew to Tokyo. SBI launched its $64 million XRP bond. Coinbase XRP supply hit historical lows. The Senate scheduled the clarity vote. All of that is real, and XRP is trading at $1.32. Fundamentals set the destination. Macro sets the timing. The destination is set. Fundamentals are screaming up. The timing is in Powell's hands, and he is not letting go. So let me take you under the surface. The supply side just did 3 things that matter more than the price chart suggests. Whale wallets, addresses holding more than 10 million XRP each, added roughly $215 million to their stacks in the last 2 weeks. While retail panic sold, the biggest holders quietly accumulated. Exchange reserves, the XRP sitting on Coinbase, Binance, Kraken ready to be sold, have been dropping for 60 straight days. That is holders moving coins to cold storage. Real money saying, I am not selling. Escrow. Ripple holds about 36 billion XRP in a programmed lockup. Every month, 1 billion gets released. In March, Ripple relocked roughly 740 million of that billion, meaning only about 260 million actually hit circulation. Less new supply than the headline number suggests. I need to give you the full picture because I refuse to oversimplify this. Here is the side that hurts. That 56.6% of XRP underwater means a massive overhead supply of holders waiting to break even and dump. Every time the price ticks toward their entry, they sell into it. That is the ceiling. That is why rallies stall. We can see exactly where those ceilings sit. Picture 3 steel doors stacked above the price chart, each one welded shut by a different crowd of sellers. Door 1, $1.38. The 200-day moving average, the line big algorithms watch obsessively. Above it, momentum traders flip long. Below it, they keep selling. We are sitting an inch under it right now. Door 2, $1.42. About $2 billion of XRP was bought there during the December rally. Every holder in that zone has been waiting 9 months to break even. The second the price touches it, sell orders flood out. Door 3, $1.96. The previous cycle high from late 2024. Above that, every XRP holder on the planet is in profit. That is the level where overhead supply finally collapses. 3 doors, each harder than the last. Both macro and regulation have to flip green at the same time to crack them. Okay, you have just absorbed more real data in 15 minutes than most XRP channels give you in a month. Now let's turn it into something you can actually use. Most channels end here. We are going to go further. Here is your framework. 4 signals. That is all you need over the next 3 weeks. Signal 1. The Clarity Act markup vote in the Senate Banking Committee, late April. If it passes committee, every American institution on the sidelines gets a green light. Stalls past May 1st, We wait until 2027. Watch the Senate calendar for the words Banking Committee and Clarity. Signal 2, the 200-day moving average at $1.38. Watch daily candle closes. One close above is interesting. 3 closes above is a confirmed trend change. The technical key, Signal 3, the next U.S. Consumer Price Index reading, the official inflation number. Print at 2.8 or lower, and the market starts pricing in a summer Fed cut. That is the macro unlock. Signal 4, April 17th. A project called Real Token launches on the XRP ledger, the first major real-world asset tokenization launch on XRP this year. Watch on-chain volume in the first 72 hours. Over $50 million of activity confirms the Tokyo thesis is real money, not a press tour. Bull case. If signals 1 and 3 flip green together, Standard Chartered's Jeff Kendrick projects $3 by year end. He put that on the record in March. Bear case. Clarity stalls. Powell holds through summer. Inflation prints hot. We test $1. Possibly 90 cents. That is where long-term holders step in. You don't need to guess. You just need to watch these signals. So let me bring this all together. Today is the day the rest of the world saw what American crypto institutions have been quietly doing for months. They are not waiting for Washington. They are flying to places that already have rules. Tokyo is the latest example. Fundamentals strongest in years. Macro worst in years. The gap between them is the entire opportunity. 3 weeks, 1 Senate vote, 1 Fed signal, 1 launch on the ledger. I will be covering every development, Tokyo takeaways, the Clarity markup, the Real Token launch, every single day on this channel. Tomorrow, I am breaking down exactly what was said inside the Tokyo conference today, which Ripple executives spoke, what partnerships got announced from the stage, what the institutional money on the ground in Japan is actually saying about XRP's next 12 months. Names, numbers, don't miss it. When the signal arrives, it will move fast. You will want to be watching. This content is for informational and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Until next time, stay sharp, stay informed.